Okay, so I'm going to be talking about ES in this video and the setup that I saw on this thing today. So what you're looking at right now is a picture that I posted in my free Discord chat. A link to that Discord chat will be in the video description. 100% free, doesn't cost you a dime to join it. You just click the link, join, you're in. That simple, right? So we have a chart of ES right here, and I posted an entry level. That's what I posted here off of this level of support. And then you also got your bullish order block right there as well. So that's what we're going to be talking about today. And you can see that was the result. It held it perfectly and ripped up, took out these buy stops, and now it's starting to pull back here into VWAP. So I'm going to clear this off, and we're going to start from our higher time frame, and we're going to work our way down. Let's go to a daily chart real quick. So we had a higher time frame level of support this morning that this thing was bouncing off of. This is that higher time frame level of support. This is what we call our bullish order block. This is a daily bullish order block right there. See that last bearish candle prior to that move up higher? And that's really where this leg up right here originated from. This is where this leg up originated from. This was that last down close candle before we had that move up. Boom. Also fair value gap confirmation, which is needed as well for it to be a high probability order block. So we had our order block, our fair value gap as well. That was completely closed the other day, right? So that's our higher time frame level we had this morning. Okay. Now, what do we see this happen? So we can see right here, price traded down. It traded down. It filled the Sunday's gap. And then after it filled Sunday's gap, what did it do? It came lower and it attacked these sell stops, this sell side liquidity. It attacked that sell side liquidity. And remember, we're still trading around this higher time frame level of support. Okay, you can see we already had one bounce off that level. This was that first bounce. If you look at my cursor, this was that first move down into that level. And then boom, you get a nice move up higher. And then it came down after filling in an upper imbalance. It came back down again, traded down into it. It attacked these sell stops, this sell side liquidity. And then boom, you get your displacement to the upside. That is your confirmation. That is that footprint. That is that fingerprint. Okay, this very strong explosive move to the upside. This is not some dilly-dally move. This is not some choppy move. This is one of those plays that pops out at you. This is one of those plays where there's no mistaking it. There's no head scratching. You know it when you see it. Boom. That's a strong move off of a higher time frame level. There's a shift in market structure. There's your swing high. Look at my cursor again. Look at my cursor. There's your swing high. We put in that swing high, we traded lower, and then boom, you get a nice explosive move through that level. That is a shift in market structure, a high probability shift in market structure. Why is it a high probability shift in market structure? Well, we have our fair value gap displacement. That's our confirmation. And it's also closed really strong above that level as well, which makes it even higher probability. That's one for the notes, right? So what did price end up doing next? Well, it traded up higher. Do we want to be buying as it's ripping up like this? No, right? We want to in a discount. It's in a premium. Sure, it's bullish. Sure, it's had that shift, but we want to get the best entry possible, right? And when it was ripping up like this, it was in a short-term premium. We want to buy it in a discount. Now, actually, it might have, from first glance, it looks like it did give you a discount, but I want to make sure. So we're going to take our Fibonacci from this low to that high. And yep, it did. It gave you a discount. So you can see it pulled back below 50% equilibrium of that price range right there. That's where we traded down to below 50%, okay? And what is that level of support? Well, we have that old high, aka the high prior to that shift in market structure. But what's important to note is, if you recall back to my series that I made on support and resistance, whenever we have an old high like this, whenever we have an old level like this inside of a fair value gap, that is a very sensitive price point. That is, more times than not, those levels are respected immensely. So we have that level that's inside of that fair value gap imbalance, right? So price did what? It came down, and it's also worth noting that this is also an order block. Okay, these last series of down close candles prior to that shift, that is a bullish order block. So price came down and it traded down into our fair value gap imbalance, right? It tested this level of support. And don't forget, this reaction that we're looking at right here, this reaction was off of a higher time frame level of support. This reaction was after it took liquidity, right? See how we took these sell stops over here? We took that liquidity down into a higher time frame level of support. Boom, shift in market structure, right? Trades down into a discount marketplace, tests your level of support. Where would your stop be on something like this? If you were to play the setup, if you're playing the 15-minute market structure, your stop is going to be either, well, yeah, your stop's going to be underneath this low right here, right? Why underneath this low? Because that's the low of the fair value gap. That's the low of that price swing, right? And for a PT, it kind of depends on how aggressive that you want to play this play. If you're a scalper, sure, you could just target these highs. Or if you want a more aggressive objective, you could maybe target these highs or these highs up here. Again, it really comes down to you and your particular style that you are trading, right? So we have the 15-minute, but there's also, you could utilize an even smaller time frame on this play. So if you were to go to, for example, let's go to a 1-minute chart. If we go to our 1-minute chart, because remember, what is price? Price is fractal. What occurs on one time frame occurs on another, right? So now we're going to go down to a 1-minute chart here. This was that pullback that we were just looking at here, looking at on the 15-minute chart, but now displayed on a 1-minute time frame. So this was that pullback. We pulled back, we pulled back, we pulled back into a discount market, tested that level of support, aka our old high, aka our order block inside the imbalance. And see right here on the 1-minute chart how we're just kind of chopping around, consolidating, chopping around. Boom, you get a nice big move to the upside on your 1-minute time frame, right? So, and you can see there is your signature now just displayed on a 1-minute chart, right? Just on a lower time frame. So we have our signature right there after taking this liquidity on the 1-minute. See those lows? See those lows? It took that liquidity, big move up. Imbalance confirmation, it trades lower back down into what? Into a discount on the 1-minute chart. Okay, remember, to determine when it is entered a discount, we take this low to that high. See how it traded below 50% of that price range? That's what you want, right? So we traded below 50%. We ended up eventually completely filling in that fair value gap imbalance. And same deal, where would your stop be if you were to play this 1-minute time frame? So say you wanted to play the 1-minute because, well, you could have minimized your risk definitely way more. You could have got a way tighter stop on this thing, and you could have maximized your reward even more. So where would your stop be on something like this? Same deal, it would be underneath of that fair value gap, or if you want to give a little bit more breathing room, it would be underneath of this swing point right here. See that? And you can see it came down, it filled in the imbalance, it just chopped a little bit, and then we eventually had that move up higher, right? See that? So think how much you could have milked out of that if you were to play that off of the 1-minute time frame, for example. See that? See, like you're risking that low, and that's what all that you had available right there. So that was the setup I saw on ES today.